Corning results are out this morning, beating expectations on both the top and the bottom line. You can see that stock is up by about 4% right now. In fact, if you look over the last year, it's up by more than 30%. You got to add this morning's gain to that as well. Joining us right now is Wendell Weeks. He's Corning CEO. And Wendell, welcome. It's great to see you this morning. Let's go back and set this a little bit in perspective, because you first came on with us about a year ago. You talked about Springboard. This is your plan for where things were going to go, the growth you saw. And at that point, you were looking for about $3 billion in extra revenue using capacity that you had already built and set up over the year. You came back to us later in the last quarter and said that that had been upgraded to about $4 billion. What do you see today?
Well, what you're seeing is we're running well above that plan, which is what should be happening. We built Springboard because we're riding several significant technology trends, probably the most powerful being Gen AI. And we just had remarkable response to our new products in that space and in others. And that's what's driving our growth. Is we've took sales up about 12% year over year since we were here last year, and earnings and cash flow up 28%.
What happened specifically with generative AI? I know you've explained this to us before, but for people who might be tuning in for the first time, and I want to say this because you've been at Corning for decades and decades, and you have laid things out, and Corning is going to be celebrating its 175th anniversary next year. You don't get to be a company that sticks around and then grows and finds new things without laying out the frameworks long in advance. What did you see with generative AI, or what did you build out that allowed you to play into the trends that we're seeing right now?
It is pretty cool to be 175 years old and still rocking it with new technologies like Gen AI, next generation mobile consumer electronics, next generation compute. And the way we do it is it's a combination of being the best in the world at our specific materials and how they interact with the world, and then linking that with long-term investment for where we think those technologies go next. And that's what happened with Gen AI. Gen AI for inside the data centers needs 10 to 20 times more fiber in the same space. So we invented a new set of high-density products to help build that neural network. The next piece of Gen AI is to connect all of those data centers to each other, and that's brought a new sort of billion-dollar driver to us with a new set of long-haul products. Beyond this, the next generation we're investing in is what's called the Scaleup piece of the network, where each AI node increases in the amount of GPUs, which then moves those copper connections into optical. And when you come to photons, you're coming into our space.
So I think of some of the great things that you've invented in the past, like Gorilla Glass. You had the glass for the iPhones before there really was an iPhone. You had these things that allow you to do it. Who are your big customers right now when it comes to AI? Who's buying all this stuff?
So it's all the big hyperscalers you can name. So all of the big AI, the big names in cloud or Gen AI services who are putting in the infrastructure, that's who our customers are. And
is there any slowdown in sight? I mean, I think of you guys almost as like the NVIDIAs, who are the necessary building blocks for this.
Well, including us in the same sentence as NVIDIA. Thank you. Respect. Who
do you compete with? Who else does this?
We're the only U.S. flag company that plays in our space.
Who are the non-U.S. flag companies that play in the space?
Mainly Japanese players like Furukawa, Fujikura.
So what, in terms of market share, if we were to look at a pie chart, I get the U.S. flag, but where do you own?
We are the largest player in the world and lowest cost player in the world in fiber optics.
But does that mean you control, for this particular business, since you just compared you to NVIDIA, NVIDIA owns 90% of the market for the high-end chips. You own what percent of the market for what you do?
We do well. I wouldn't portray us as having control of the market.
Okay, but is it 50%, 40%, 90%,
we
20%?
We do very well in this market.
But you control photons.
So no, I just said If you come into photon space, that's my home.
Is it a particle or a wave? A photon?
You can't.
Both. Good for you.
Hold on.
Duality.
Hold on. As a public company, you can't say what even estimate ballpark the market share that you have in this space.
It depends how you define the market. If you were to ask any one of our customers, what they would say is they can't build their infrastructure of the future without.
I understand, but I'm asking if an analyst were on the with us right now and they said what percentage you have compared to these Japanese players and others, they would say what?
I would say we are at least twice the size of any one of our competitors.
Okay, we're going to get a square answer. I'm saying, is it 70% of the market, 50% of the market, for just something?
It is a large portion of the market.
Okay.
Wendell, let's talk a little bit about where you see this growth going. So Springboard, you had upgraded the last time you were on with us to say $4 billion. What do you see at this point? Are you upgrading any of your financial guidance on this?
We upgraded both our internal plans and our high confidence plan for our investors to between $4 and $6 billion. We'll take another look at that in a couple of quarters. If we keep performing like this, there's a good opportunity we'll upgrade again.
You bring up the American flag being flagged as a company that's here, and I suppose you do that because of the incentives that President Trump is putting in for manufacturing here in the United States. How do tariffs impact you? What do you manufacture in the United States? What would you say on that front?
Well, our philosophy is that we put our manufacturing platforms in the same region as our customers. That is our long-standing philosophy. So as a result, in the U.S., 90% of what we sell in the U.S. is U.S. origin product. Of the remaining 10%, the huge majority is USMCA compliant. Only about 1% of what we sell in the U.S. we make in China. On the other hand, we have a similar type situation in China. So that philosophy serves as a natural hedge against any trade friction. We guide that in this quarter be somewhere between 1 and 2 cents of earnings per share is the impact of tariffs. We're actually seeing both new and existing customers start to approach us to make use and leverage our large advanced manufacturing platform here. And this could turn into a future driver, which could accelerate our growth even faster.
So what do you worry about? What are the areas that you have any concerns or that you have your team focused on at the moment?
Well, our main piece is how do we win in the next technologies over the next 5 and 10 years? We're investing today for that scale-up piece of the network. If we win in that, that is 2 or 3 times the size of our current Gen AI business. So it's a dramatic opportunity. We know it will go into photonic space from electronic space. The exact timing's hard to call, but one way or the other, we have to win that technology platform.
Right now, you're riding a wave of AI spending from big capital expenditures that's coming from all these companies. If they were to ratchet that down, that would impact your growth plans.
Yes, it would. But so far, as I've shared with you before, every call that I'm on with my customers, it is all about how they can get more of our new products. We've yet to have a discussion about how do they pace their current commitments to us.